Hey guys, this is Rudy for Investor Investor. So Occidental Petroleum has just released its Q2 results for 2020, and I thought I can take a quick peek and see what we have as they've just reported. So I'm going to have to read some of this and share some of the highlights with you. Otherwise, maybe it's the lowlights depending on where you lie. But let's see where they landed with the impact of the coronavirus and all the stuff that was happening during Q2 of 2020. So the first thing we can look at for today is what happened with Oxy today during regular trading hours. And we can see over here that at the end of the day, Oxy had gone up about 6.6%, so about $1 for the day. And then in after hours trade, it dropped back about 2.3%. I'm not sure where it is right now. I took the screenshot a few minutes ago while I was looking and reading through the Q2 report. So it might have had some change. Either way, I'm not here for a day-to-day trading scenario, but I thought I'll just add this slide in just for interest sake. So let's take a look at what Vicki Hollub, the CEO, said today. And I'm reading over here, it says we continue to make progress on our debt structure and have significantly exceeded our cost savings targets while delivering operational excellence across our business. Now, the conference call is tomorrow, and we'll have to see sort of what that looks like in more detail, but obviously you could expect the CEO to make a statement of that nature. She adds, these decisive financial and operational actions reflect our leadership as a low-cost operator, positioning us for success when market conditions improve. She adds the Q2 results were impacted by the steep decline in oil prices due to the continued significant drop in oil demand as governments around the world implemented measures to contain the spread of COVID-19. The quick pickup here is the West Texas Intermediate and Brent average prices for the quarter, which were $27.85 and $33 per barrel respectively. And of course, we know that now WTI and Brent are trading comfortably in the $40 range or thereabouts, which indicates for us at least a significant boost in potential revenue for the next quarter. The statement they released says Occidental today announced a net loss attributable to common stockholders for the second quarter of $8.4 billion. Or $9.12 per diluted share, an adjusted loss attributable to common stockholders of $1.6 billion or $1.76 per diluted share. The analysts were expecting a loss of 168, so they came in at a loss of 176. So it's about a 5% underperformance in terms of the analyst expectations. Second quarter after-tax items affecting comparability included impairment charges of approximately $5.2 billion in oil and gas continuing operations and $1.4 billion in discontinued operations for total impairment charges of $6.6 billion. Tomorrow or so after the conference call, I'll do a little deeper dive to get a better understanding of the impact and what this is. Earnings news, all business segments exceeded guidance and continued to deliver operational excellence. Combined production of 1.4 million barrels of oil equivalent per day exceeded the midpoint guidance by 36 million barrels of oil equivalent per day. The Permian Resources exceeded high-end guidance by 5%. Producing 465 million barrels of oil equivalent per day. In July, Oxy also raised $2 billion in senior unsecured debt and completed debt tender offers to retire $2 billion of the 2021 debt maturities. That's good news because there's a debt reduction there. Oxy says they significantly lowered their cost structure by fully delivering acquisition cost synergies and additional cost savings, achieved 2020 annualized run rate of $1.5 billion of total overhead savings, including $900 million of synergy and $600 million of additional cost reductions. Achieved a 2020 run rate of $800 million of operating reductions, including realizing $2 million in synergies and $600 million of additional cost savings. Some of these may result directly to the acquisition of Anadarko, because when two sort of equal sized companies merge or one acquires the other, obviously you don't need two sales departments and two marketing departments and two finance departments, so there's some obvious cost savings available there for sort of picking low hanging fruit as you integrate the assets. Extensive cost management coupled with strong production resulted in second quarter domestic operating expenses to come in below guidance at $4.69 per barrel of oil equivalent. That's good news. We'll see how that translates tomorrow when we can dive a little deeper into the second quarter earnings results. Okay, so let's just look at the actual Q2 performance. We have Q2 EPS coming in at $1.76. The analysts were expecting a loss of $1.68. It's a 280% decrease in earnings over Q2 of 2019, when they had reported positive results of 97 cents per share. You know, it's not really significant in terms of where it's at right now. They missed the analyst expectations by about 5%. If you want to view it logically, you can say the analysts underestimated the loss that Oxy would drive for Q2 by about 5%, as opposed to saying Oxy missed analyst expectations. It was very difficult to guess where the EPS would come in after 3 months of declining oil prices and huge reductions in terms of demand based on the coronavirus. But for me, it's kind of like a non-event here. What would be more important and interesting for me is tomorrow, which is August the 11th on Tuesday, is Occidental's earnings call. It's 11 a.m. Eastern or 10 a.m. Central. If you want to listen in or join the call and you have time available at that time, just go to oxy.com. That's the easiest thing to do. Click on investors and you can sign up for a reminder or get the conference link that way. So let's see what tomorrow brings, and I'll be back maybe tomorrow, otherwise the day after, with some more information on it based on a deeper dive on Oxy. For now, I'm kind of indifferent in terms of these results. It's great to see the increased production, but of course you need to transform that into sales. And in addition to that, you need to drive some efficiency in terms of profitability. If I could be as bold as to speak for Oxy, I expect great increased revenue based on the production, based on the increased oil price, but I'm hoping for increased profitability as well as they drive some efficiencies after the acquisition of Anadarko. That plus debt reduction, and I'll be a happy camper. So until next time, this is Rudy signing off for Bester Investor. We'll be back within a day or two with more information. Stay safe. Take care, everyone. Talk to you soon. Bye-bye.